Good day traders, you're welcome to Remit Trade Academy. My name is Paradise. In today's video, I'll be showing you a strategy that you will use using volume indicator. So I'm going to show you how you can use this very strategy to know when a market is going to reverse right down, and actually how you can use it to enter the market. So let's dive into it. Ensure you watch the video to the end, because I'm going to show you something very important that you can use to trade, and it will help better your trading methods. So let's dive into it. Now, if you've not subscribed to the channel, please help subscribe to the channel, hit that like button, and ensure you turn on that notification bell. Now, if there is any video you want me to do in the future, you can as well leave it in the comment below. Now, like I said earlier, this is Remit Trade Academy, and then you can reach me via this contact. Just WhatsApp me with this line, and then you can visit our website, or you can email us. Remember, this is the home of successful traders. Trading volume is the amount of security that was traded during a given period of time. So that is volume. So when you put on your volume indicator, you are actually looking at the amount of that security that was traded within that specified period of time. We have two types of volume indicator. We have volume by time and volume by price. Now, volume by time is the traditional volume indicator you see on your chart. That's if you go to your Binance platform and you go to indicator and you search for indicator here and you search for volume. Now, this volume you're seeing here is the traditional volume, which is also known as the volume by time. Volume by time tells you the amount of volume of a security that was traded within that specified period of time, while volume by price tells you the amount of security that was traded at a specific price level. Alright, so for the purpose of this video, I'll coincide this video to only volume by time. So let's get into the volume trading strategy. So I'm going to the Binance platform now, and I'm going to show you a very important strategy you're going to use to know when a retracement is going to come in and how to actually enter the market with this very simple strategy. So let's dive into the Binance platform to see how we can use this volume trading strategy to better our entry. So if I come to the Binance platform here and then I put my on full screen, then now this strategy work very well on altcoins, not Bitcoin, on altcoins. So especially if you have any altcoin USDT pairs, it's work very well. So first of all, let me look at BNB USDT. So if I look at BNB USDT, now this volume trading strategy is very simple. I'm going to give you just a little tip that you're going to look out for, and then when you see this tip and you follow it, it's going to play out exactly how you see on the chart. Now remember, not all volume indicators inherently correct, like they are 100%. In fact, no indicator you see on the chart are 100% correct. They have its flaws as well, but this volume indicator will give you 80 to 85% winning rates. So this is the volume, so I click on the volume indicator. Then after I put the volume indicator, now the first strategy we're looking at, after I put on the volume indicator here, the first strategy I'm going to look out for here, and I'm going to show you very well, is what we call volume spike. When a market move parabolically to the upside, let me show you very briefly here. Let's say this was support. Then a market move from support parabolic to the upside. Very well, move parabolically to the upside. Now, we want to see a volume spike around the area that market is going to retrace down. Now, when the market is retracing down, two things happen. Either the market will retrace to this point. Now, after the volume spike and the market retrace to this point, let's say for about 40% retracement or 50% retracement or 60% retracement, volume spike around here, market retrace, then what you want to see here is next move to the upside. That's the first method. Now, the second one is if you have a support level around this area and then you see markets move parabolically to the upside, and then after then you see volume spike. I'm going to show you that this very strategy on the chart. Volume spike. Now after volume spike, then you see a sharp drop to the same level. Now if you see something occur like this, be very careful. Now two things is going to happen at this very area. Two things. Number one, since we see a sharp move from support to the upside and then a move back to the same support, what we're going to see here is a retracement. That's the first thing you will see, a retracement to the upside, and then markets will break down. So it will not form a lower low. Okay, now when you see this kind of formation, market go right down and it meet the same support where the market started from. Expect the market to move back up and then it goes down. That's number one. Now number two, if you see a consolidation, that means market consolidate around this area, expect the market to break right down. Because there were a whole lot of pressure pushing the market right down from this area down. So when it consolidates around this area, expect the market to go right down. So I've talked about two trading strategies here. Number one, when you see market move parabolically to the upside and then you see a volume spike, market goes down. If it retraces like 40, 50, 60% retracement at this area, when you look out for an engulfing pattern or you look out for closing price reversal candle, then at this point you enter your market is going to go up. After the volume spike, retracement, market move up. The second one here is market goes up, retrace back down completely to this level where the market moved from the first time. So if you go to this point, market move up, come back down, then market will move up. That's the first case scenario. Then you will see the market move right down in this formation. Now, the second case scenario is that you're going to see the market will consolidate around the support level, around this level. And then after the consolidation, market will still go right down. That is volume spike. Now, another one is after the market has moved parabolically to this place, now you will not see any volume spike on the volume indicator, but you're going to be seeing spike on the candlesticks. You're going to be seeing spikes on the candlestick. Just know that retracement is about to come in. I repeat again. After the market moved parabolically to the upside, and then you don't see any volume spike, but you see spike on candlestick, not spike on volume, then know that market is going to retrace right down before the next move up. So, two trading strategies. Number one, volume spike. Number two, no volume spike on the indicator, but there is volume spike on the chart. Okay, now if you take a look at BNB USDT pair, and then this is 1-day chart. Now, like we said earlier, this is volume by time, which means each of this volume is in 1-day period, so amount of BNB and USDT was traded. So this is the volume shield here, and this is the traditional volume I talk about on the slide. If you look at this area, there was a volume spike. Market moved from this point up, and then at this point, we see a volume spike on the indicator. Now, after the volume spike, what happened? Market goes down. It goes up again, come back down, retest the level, and still go up. Remember, this was about, we can say from here, from this level to this point, it's about, from this level, from this point to this point, and then the retracement is about 40 to 45% retracement of this initial move. So the market goes up again. Now, if you look at the other one, this one as well, you see, market move right up. You see, volume spike. After the volume spike on the indicator, market goes down. And then we see the market move over around this area, and finally go back up. That's the second example. Now, if you go back in time and try to figure out what volume actually, market move up from here up, volume spike on the charts. Now, there was no volume spike on the indicator. Then in there, like that was the second strategy I talked about, market goes down and still go up. Remember, what you're looking at is market does not make a complete move to the support level, this very support level. So at this point is where you want to take your trade. After the formation of this candle, so we'll take your trade. Now, when you confirm that the market has gone down, maybe by 2-3 candle, that is bearish candle to the downside, then you cannot take your trade at the formation of the next bullish candle, which you must allow to close. Then your stop loss should be placed below the support, not the recent support. If you move a little bit further, now if you look at this very example, the market move up, volume spike, this area, market come down. Now, remember, this was 100% retracement. I talked about that when I was giving an example. So markets move from this point to this area, and then it turns back down 100% from where the market moved from initially. The first case scenario I talk about, market will move up and then come back down before it will go up. Now, in some cases, it will continue down. So take note of that. Anytime the market move up, make a 100% retracement to the downside where the market previously moved from, and then what you're expecting here is that the market is going to move up and then come back right down. Now, if you look at this area as well, if you look at this very area, market move from this point up, volume spike on the charts, volume spike on the indicator, then market retrace. Now, this will help you figure out when a retracement is about to come in so that you can sell off, or you can prepare for the next move down as a retracement before you prepare for the next entry, for the next impulse that's going to come in the market. So if you look at here, after the volume spike, market come down. This was about 60 to 70% retracement, and then market goes up. Over around this area, market goes up again. Now, if you look at this very place, now there was no volume spike on the indicator. No volume spike on the indicator. There was a spike on the charts. This was a formation of the shooting star formation. Then we see this bearish candle, market come down. There are a series of examples on this very pair. Like I said, this strategy worked very well on altcoins. It works very well on altcoins. If you look at here as well, you see volume spike. Now, there are some time where you see volume spike on the indicator. Volume spike on the indicator. Then after maybe 2-3 candles, let's say in this case, volume spike on the indicator, the spike occur here. The spike also occur on the chart. Then you see 2-3 candles after the volume spike, market will definitely come down. In this case, 2-3 candles after the volume spike here on this very candle here, market goes up. 2-3 candles. That's what you expect. Market is going to come down. Now, if you see here, market retrace 100% to this level. Market move up, retrace 100% to the support level where the market started from. What you should expect, first case scenario, market is going to go up, then to come back right down. Don't forget. Now, in case where the market don't move 100% retracement to the downside, maybe it move and then pause before it's going to go back right up. Two strategy that I'm talking about here. So you have to take note of that. It will really help you to know when a retracement is about to come in so that you can enter with the next impulsive move coming into the markets. Let's look at another example on Dogecoin. If you look at this very chart, you see at this point we see a volume spike. Market has been going up. Then we see volume spike on this very candle. Then after the market retrace back down, and then we see a hammer here. After then the market start moving up. You're supposed to take this trade after the formation of this candle. Reason why we see a consolidation here. Markets was respecting the particular distance level with this consolidation. Then we see a breakout. There was a breakout on this very candlestick. Then after then we see the market ride up. Now, what you expect here, two things. Number one, volume spike or no volume spike on the indicator, but a spike on the chart. The market is going to go back down. Now, if the market retraces 100% to this level, that means if we see 100% retracement from here down to this level, first case scenario you should be looking at for is, number one, the market is going to go back up and then it will come back down. Or you're going to expect a consolidation within this area. The market come back down. So the first thing here is after volume spike on the chart, we expect the market to retrace back 60, 50, 40% retracement and then still move back up. You know, the market does not move in one direction. So market have to move in pulse and then come back down, retracement. Move in pulse, come back down, retracement. That is how the markets move. So when the market is retracing and you are holding the coin for a long time, there is no problem about selling your coin or being perturbed about the market going down, because you already know the market is going to go up. So with this simple strategy, you know how to position yourself and when to enter a trade. So in this case, you see volume spike, market goes down, goes up. Then if we go back here, you see volume spike here, a very big spike on the chart, volume spike on the indicator, market go down, it still go up. Now if you look at this point, there was no volume spike on the indicator, but there was a lot of spike around this area. It's indicating that buyers are finding it difficult to push the market to the upside. Therefore, the market is going to come down. So you see here, market come down. But what we see here is that the market does not come down 100% to this level where the market initially moved from. Then after then you see the market still go up. Very important. This strategy works very, very well. Let's look at other ones. See, you see here, volume spike, market come back down. Spike on the charts around this area, and then volume spike on the indicator as well. This is another example also, volume spike, spike on the indicator, spike on the chart, market go back down, and then revolves around this area. If you look at these very charts, you see this was a key support level. This was a support level. Market goes up, volume spike, come down, move 100% to where the market initially moved from. Market move a little bit as retracement, because this is already an impulsive move. Retracement, market will break and come down. Another thing I say you can see here is consolidation within this area. Then after consolidation, market is going to go back down. So you can see you can use this traditional volume indicator, which is volume by time, to help better your trading methods and to know when to take profits, when you see volume spike either on the indicator or on the chart, so that you can take your profits, relax, wait for the retracement to come in, then you can now buy again at better price. So that is that for today's video. I hope this content was very educative. Remember, this is Remit Trade Academy, home of successful traders. Now if you want to really dive into the market and understand the dynamics of how the market moves and understand certain things about price action, check in the description below and contact me via that WhatsApp contact, and I will show you a good way to trade and trade successfully. Thank you very much for watching today's video. Ensure you subscribe to the channel, hit that like button and turn on the notification bell. Thank you very much, and I will see you in the next video.